Good afternoon, everybody. Welcome to TraderMerlin. It is the weekend edition, meaning it's Friday, so cheers, everybody. I was in such haste. I did not bring a beverage upstairs today, so I guess I have to go with day-old water over here. So cheers to everybody. Hope you had a fantastic trading week. Not the best for me. I actually had a losing week on my short-term stuff. My long-term stuff did okay. Only new additions was some silver added on. Sold some puts on silver today, but not a lot of great trades for me this week. So it is what it is. Can't win them all. Today, this is the final show of August, by the way, August 30th today. So what I thought I'd do is I was going to kind of go through the top 8 markets, see how they fared for the month, take a peek at those. But you know, the problem is when I lost my hard drive with all my data, with all my graphics, with everything, I lost my template. So I don't have I used to make a list of all the different markets as they unfolded, but I'll have to rebuild all of that for you. My apologies if I don't have it all set up for you today. So I want to start this week. What I'm going to do is I'll leave it on the daily time frame, but I'm going to give you the monthly results just so we can kind of see how it performed for the month. And I'm going to start my way down at the bottom. Now, I don't think it's any surprise for those of us who are in the know. What was the worst performer for the month of August? That'd be this guy. And it really doesn't seem like much, but you know, this has been a slow trajectory to the downside. And if you go to August 1st, you know, we're considerably down. 10% slide for Bitcoin for the month of August, so not the best. You know, I'm still optimistic that this will get better and better, but you know, I mentioned back in April when we talked about the halving and its impact, you said 3 to 6 months of sideways to down action, and you know, I feel proud of my call because it's still doing what I thought it was doing. I'll mark out the halving date, which is April 19th. So I'll put April 19th on here. Boom, boom. There's your vertical line for that one. You know, it feels like that trend is going to stay in place until it doesn't. You know, it's going to keep trending down. At some point, and we're all eagerly awaiting this one. I know Big Ev, you are, and many others here who are holding Bitcoin right now, like myself. We're waiting for that next breakout, but it seems to be making lower lows, lower highs. You know, this week was not a good week. Today we're down 0.74%, but for the month, Bitcoin down 10%. Based off all the stuff I've looked at, all those numbers, that turn is coming soon. Hey, Andrew. My tech issues. I had no tech issues today. Say we really did lots of. Well, what do I do? Please call as a go. Nah. And you know, that's funny. You have these people who are, you know, their camp, right? They're in like the Bitcoin maxi category, which is it's the greatest thing ever, and it's going to go to $55 million per Bitcoin. And then you have the haters who are like it's going to zero. And it feels like, you know, if you like Bitcoin, as I do, I like what it represents more than anything, then I have to be a Bitcoin maxi, which is not true. You know, I do think that all securities, all assets, whether they're good or bad, have their ebbs and flows of capital that flows in and out of those instruments. And, you know, when I showed you guys the 4-year cycle pattern of Bitcoin, this was a part of it. You know, the last time we had a period of move up like this, which is where you have the halving and then it starts to slow down. Let's go back 4 years and see if I can spot the halving date, which would have been back in 2020. Here is the last halving date, somewhere right around April of 2020. That's that vertical line I just drew off to the side. So what happened there? Well, it had a huge rally up. It's an early on piece of the cycle, and is that right? Yes, that would be 2020. You know, you have this kind of sideways action, and after the halving that happened here, it went up a little bit, but then just kind of went sideways for a period of like 6 months. And I think that this time would be no different. So here we are seeing just the trickle down a little bit. And again, I think that'll step up and we'll see some nice moves here in the future for Bitcoin. But patience is a tough one to deal with at this moment in time. Your second worst performer for the month of August, crude oil. And that picture has not changed whatsoever. You know, there was conversation earlier this week about should we short oil, and for those that did, great. I was expressing my little bit of trepidation on that one simply because a little bit concerned about the conflicts in the Middle East, what's going on over there, and just wasn't not a play I'm going to make myself, and I know some of you did, so great, because we had a fantastic, since that question came on the air, I think on Tuesday, it's been selling off pretty much ever since. You had 3% down move today for crude oil, so that was pretty awesome. But for the month, you're looking at 5.52% slide for crude oil. That's a pretty steep drop there. I'm coming from the bottom, so this would be number 6 on the list. It's tough for me to count these things backwards. That's going to be our 10-year. Now, we have seen over the past 5 sessions a pretty sharp bounce in that 10-year yield. Okay, and the reason that this is so important for those who might be new is that 10-year yield represents the foundation for your 30-year fixed rate mortgage. So that was a pretty important piece. Seeing this one kind of dip up just a little bit last few days, but overall that yield has dropped considerably. 3.1% slide for the month of August, and of course that is good news for anybody looking to buy a home or borrow money because it's getting cheaper and cheaper, which of course fuels economies. Don't worry, I'll get to economic data here in just a second. That was number 6. Number 5 was the Russell 2000, RTY. So it doesn't look like it did poorly this month, right? It looks like it actually did pretty good because of the rally we've had for the past couple of weeks. But if you look at the very beginning here, we started on a high note. So if we could just take out August 1st, 2nd, and 3rd, it'd be a great month for the Russell 2000. On the month, down 2.3%. In markets, last quarter, crude oil was the best performer. You know, that's the challenge we get with commodities. Typically, it's going to be at the top of the bubble or the bottom of the bubble. To me, I find that fascinating. And there's these really cool tables. Let's see if I can bring one of them up. Let me see real quick if I can bring it up for you. You type in like historical, asset, class, rates of return. All right, and a lot of times it's this really cool looking table that breaks them all down. Yeah, here you go. So something like this, I'll just click on this one, total return asset by rankings. And this will pop up here. This is Visual Capitalist. Yeah, great site. Continue without disabling. And, this type of table. This one does it by year. So you can see going back to 2004. This is old. Goes all the way to 2014. But I really like these ones because you can see how quickly things leapfrog. Like, for example, let's just look at gold. So 2004, gold was second from the bottom. The next year, 2005, gold's at the top. Then the middle, top, middle, top, middle, dead low, near the bottom. It's just always this ebb and flow. And this is on a yearly cycle. And Margaret, you're right. You could look at this thing from a quarter perspective, and you could look for a monthly perspective. And that's why I like to do, not that it helps us immensely, but I do like to, at the end of every month, run through those numbers of the top 8 markets that we cover just to kind of see, has that leadership changed? Is there money flowing clearly from one asset class or subgroup into another? And if so, what is that? Because that might give me some opportunities for the next month or next trading session, and could also give me opportunities to buy into things that are very depressed and beaten down. So I definitely like to look at that, and cycles are absolutely a huge part of it. Let's see. What happened, Thomasina? What did we do? Oh, Thomasina's a lady. Yep. Thomasina knows her pronouns. Okay, Obioma, good to see you. It's late over there, right? I think in Italy would be 9 hours ahead, so you're just about to hit Saturday morning over there. So thanks for joining us, Obioma. Hope you had a great day. Keep on moving up our list here before I get too off topic, as you know that can happen here. So we finished with that Russell 2000, which was 5th place. We're almost at podium time. 4th place, the Dixie Dollar Index. Again, it's just this real, hold on a second, something's not right here. I'm incorrect. Yeah, sorry, 4th place, down 2.2%. So it was correct. Okay, so we looked at this one the other day. I thought this was interesting because we talked about it bouncing at 160. It held there for a couple days, and now you're getting that bounce out of it. That was the most logical point. You can see here the tail from the candle on July 27th. It hit it again, retested on December 28th of last year, and then we spent 3 days at that level, and now all of a sudden a nice bounce out of it. That's great. However, as important as that zone is, lower lows, lower highs, going all the way back into April of this year, I still feel like this is the more powerful, more dominant trend. Even though it's the shorter term, this is what's happening right now. So the question I have, not for you, but for me, is where does this go? Where does this retest, right? Does it come all the way back up this 102 and retest that kind of demand zone that was there that broke? Or does this now rip and start to make some new highs? I am of the camp that it's going to come up and retest here soon. We could go into something like a 4-hour time frame and get a better clue as to where it might go. You can see in here, you do have a small little DBR right around 102. So the 102, and then you got the next stop right above it, which is better at 102, 168. So that's my thought on the dollar index. It's an interesting chart. Definitely showing more and more weakness. Again, this should be good for the economy if this dollar continues to sell off and drift lower here. All right, that was number 4. Number 3, do we actually start to step into positive territory? Yes, we do. 3 out of 8's not bad. Here's your NASDAQ. This was one that was up for the month of August to the tune of 0.45%. Even with these wild swings, just really wild swings, it's only up 0.45% for the month. Not that great. Finishing on a good note today as we were up 1.18% for the Qs. At one point, we were actually looked like we're very close to being down on the day. Again, I was hoping for a deeper sell-off. I was scouring the market for opportunities to deploy some capital, sell some puts, maybe buy some stuff at lower prices, but I didn't get anything. Only trades I did for the put portfolio were silver and earlier in the week I did some Qs, but I also did the Rivian shares as well. I did a bunch of Rivian. All right, so that was third place was the NASDAQ 100. Second place is the old SPY S&P 500. Looking pretty good. If you look at this last couple weeks, it really felt like there was this consolidation, felt like it was starting to slowly roll over, and all of a sudden the last 2 days have bounced aggressively. So the question will be, do we get follow through next week? If we do, I think you'd all agree that our next logical target for the S&P 500 is going to be to smack its head right into this overhead supply zone, which is going to be your all-time high, 57.21. Right, that's where we'll probably be headed if we can break through this level that was put in today and just break that. Feels like it's there. The momentum feels like it's there. Next week, by the way, and we'll talk about this, is a much lighter week. Not only for this show, because I'm definitely not going to do a show on Monday, and then I may, it's probably like a 10% chance, take either Wednesday or Thursday off and go to Disneyland, although I may not. We'll see. But we do have a light economic data week. Really, you have one central bank announcing next week. That's going to be Canada. If memory serves me correct, when I was doing my research, Canada will be on, I think, Wednesday, and they're expected to go from 4.5% down to 4.25%. And then the big stuff is happening with the jobs numbers. There's 5 announcements next week, which all tie into jobs and unemployment. The big number coming out on Friday, which should be the unemployment rate, which right now everyone's expecting to actually get slightly better. We'll talk more about that next week. So all in all, things looking okay. If we have some a light trading week next week, meaning the first part of it, I think what will really happen is a lot of people are just going to take their time, digest all this information, because we had a lot of big stuff this week, which we'll get to in just a second. And if that's your second place finisher, then there can be only one. The Highlander, as it was. Here is your best performer for the month of August, and that is going to be not Bitcoin. That's going to be gold. There it is. No shocker here. That thing's just been on an uptrend and higher highs and higher lows and uptrend. Love it. Keep on rolling, Mr. Gold. I wish I had more of you in my gold coin collection, but trend looks great. Today, a down day, 1.28%, which no big deal. I think what's likely to happen here is we'll probably have a little bit of a pullback, but that trend looks great. Things look real strong for gold. Demand is increasing. Central banks are increasing. It's always been that flight to security, right? And it begs the question and has me wondering, is there something on the horizon? Obviously, we've talked about this many times in this program, but what does the future hold? If we knew that, then we'd all be trillionaires. No one really knows exactly what that future holds, but does the actions of central bankers or institutional money driving the price of gold up mean something? Does record amounts of cash by some of the top corporations in the world, does that mean something? Does Warren Buffett liquidating a lot of his portfolio to go to cash, does that mean something? Of course, I think it does. I'm speaking almost rhetorically here. But what exactly does it mean, right? We don't know. When is this coming? Is there something coming? I just don't know. My expectations are that we're going to see something to the downside that could be, light to moderate. I don't think we're going to see an extreme downside move where we like scream in agony as the market falls apart. But, I think we could get some powerful down days here in the near future. But just when, it's been eluding me. Let's see, what other question I have here? If the jobs number gets better, but they are much like they have been mostly public jobs, does the market care? Well, I think that market does care. Unemployment by itself is just one reading of it, right? And JB, I think you're right on. There will be a lot of scrutiny, and if I have some time, I'll dive into it, but my time's been pretty limited lately. What you want to do is look into that and see where's the job creation coming, right? Is it just retail jobs like McDonald's jobs being created, which are the low bottom of the barrel paying jobs? Or are we talking six-figure tech jobs or designer jobs? Are we seeing high-paying jobs come back? It seems, just from what I've read and what I've seen, that a majority of the jobs being created are lower-paying jobs, and which, of course, translates to better corporate profits because companies will pay less, make more, and earnings look good, which is what I think has been happening for the past several years now. When does that stop? At what point does an employer need to now spend good money to get those good employees, right? Have to spend the money to get the right talent. And I'm not sure when that happens. But yes, I do think the market does care where those jobs are being created. And from an economy perspective, how those jobs pay. Because if let's say I'm an instructional designer and I was making, a good six-figure salary, and now all of a sudden I got laid off and I'm now an instructional designer for a company making $50,000 a year. I'm still doing the same job, but because it was hard for me to find a job, I'm going to take a lot less. Who benefits there? Well, the companies, right? So the new company just got a good talent at a much cheaper rate. Their profit margins are going to get better off the utility of me. So, where those jobs are created is an interesting one. We are probably in the 8th inning of the current bull market. I kind of feel like that too, Big Ed. I think that after the election is when things are really going to start to change. And I don't think it matters who's elected president. I really don't. I'm already at the point. I don't know if you guys are. I know some people here are very into politics and really have a strong, passionate feel about one candidate or the other. That's good. I'm happy for you, and you should feel passionate about who you're voting for. But I'm just sick of the bickering, and I hear it's just nothing but bad stuff back and forth. And this party sucks, and this party sucks, and you're stupid. No, you're dumb. No, you're an idiot. You're dumb. Your policy. I feel like I'm in a room with 4-year-olds and it just drives me nuts. I can't wait till after it's all over and we can just go forward. I feel like election time, that 6 months before an election, is like one of the worst times for a display of humanity and how we treat each other. It's just absolutely awful. It drives me nuts. Doesn't Dollar General giving bad guidance matter to our economy? Margaret, I tried to figure that one out on yesterday's show. So here you have Dollar General, which sells some of the cheapest stuff. Right? It's all liquidation. It's all cheap, cheap, cheap. So if you're in financial hardships and you're destitute with money, you're going to go to Dollar General. But they're lowering their forecast. Now, maybe it is that people are feeling like they're in a better position and they're saying, okay, we're not going to go to the bottom of the barrel to go shopping, which would be Dollar General or what's the other one? Dollar Tree or 99-cent store. Maybe I'm going to be going to Walmart. And we've looked at that chart of Walmart yesterday, which is just fantastic. I mean, I think Walmart is definitely reaping the rewards from people looking to save money. But why the move away from Dollar General? That was surprising to me. Maybe just poorly run, poor operations. They cited the economy as being a part of it. That people are not wanting to spend the money at Dollar General. It's like, where are they going to spend it? That's the lowest denominator for spending. So it didn't make any sense to me, Margaret. Their guidance does matter, but when I look at the hierarchy of retail sales, Dollar General is the lowest of the low. No offense, but they're selling garbage. They're selling junk, cheaply made, poorly made, extremely cheap. Whereas I could go up to the very top of the scale, and I'm talking, your Dolce & Gabbanas, your Pradas, your Fendis, really high-end Ferrari type of stuff. Yeah, those are high-end retailers, and I haven't looked at those numbers for those ones. But yeah, I think it does speak to our economy. If that money's not going to Dollar General, is it because people are just so poor they can't afford Dollar General, and now they're going to resort to robbing things? Well, that's San Francisco. Or are they now a little bit more comfortable and saying, hey, let's step it up and go to Kroger's or Vons or Stater Brothers and buy our groceries, which might be a little bit better. All right, now I got the discussion rolling here. John says, ES price movement today, as it started, was really expecting a slow trickle day Friday pre-holiday. Yep, I thought so too. I thought we were going to see this just kind of a slow, quiet, boring day. And as I was teaching and doing some other stuff, you look over and it just ripped. Here's your daily of the S&P. You can see that morning was kind of looking a little bit weak, and then all of a sudden, bam, just screamed to the upside, which is kind of strange, especially when you look at the core PCE Price Index numbers, which I will cover here in just a minute. So bear with me as I get through all this other stuff. But yeah, we'll look at that S&P here in just a minute in more detail, John. All of us, I'm worried about foreign policy. I'm worried about domestic stuff. I'll be honest, one of my biggest concerns is if one candidate doesn't win and the other one does, then does it start some kind of civil unrest in the United States? Because, the election's rigged. I mean, it got pretty crazy last time on a rigged election, whatever. Whether you believe it was rigged or not, it doesn't matter. That the situation was that a lot of people did, and, protests began. I'm hoping that we have some civility regardless of the outcome of an election, but you never know. Yeah, you never know. It's never-ending circus, run up to elections. Yep, absolutely, Liz. Absolutely. Aren't employers losing a record number of employees from retirement? Wouldn't those higher-paying jobs that need to be filled? Well, not necessarily. So, Steve, I don't know statistically. I haven't seen that fact on the number of high-paying jobs that are from retirees stepping aside. But if someone's retiring, okay, let's say I've got a senior editor position at a newspaper, right? I got a senior editor position is making $200,000. He's been with me for 50 years, right? And Bob's retiring today. Congratulations, Bob. When I look to fill that position, I'm probably not going to be paying $200,000. That $200,000 was like legacy tag for an NFL football player. The more experienced, the more their base comp is. So if I'm going to bring in someone to replace that individual who was making $200K, maybe that drops them down to 125. It'll probably be a bump up from what they're making, but I'm not going to make the big leap to what this senior editor was making. So I don't know if that necessarily means that your business is going to be forced to pay higher salaries for that role that just disappeared or opened up. I think you're actually going to be paying a lot less for that and maybe giving them seasonal bonuses along the way or annual bonuses to get them up to a level, 5, 10, 15 years down the road to reward their loyalty. But initially, that position will probably be filled by a much lower paid employee, would be my thought. Inflation has hurt the lower income segment of the population disproportionately, which tend to shop at Dollar General. Maybe, Big Ed, but my question would be, where do they shop? Where are you going to go? Like, if you can't afford Dollar General, then I think the next stop is theft, right? If you can't afford Dollar General for a can of beans, does that now... Do we see crime rate surge because of this? I mean, it'd be an interesting study, something that's way beyond what I do. When are we seeing Bill Addis on here again? DG, I'm going to get him on. I need to book him. Who knows? It's up to his schedule. But I'd like to get him on September 18th, the day of the FOMC announcement. That's when I want to get him on. And now that we're already, in September, it's going to be 3 weeks out. So, yeah, Bill will be on in the next few months. When you travel overseas, do you use a VPN? Yes, I do. I use NordVPN on my laptop, but typically when I'm overseas, JB, I don't do a lot. On my phone, if I'm traveling, like when I was in Ireland, I did some trades on my phone, which I did go through the VPN just to be safe. But typically, for most transactions, if it's not through my trading accounts, I'm not worried about it. I just leave it. But yeah, if I'm trading, I'll definitely use a VPN. Anything with like personal, really important information, I will do that. Quality. People started thinking they were too poor to buy crap. Maybe, Fury. Maybe. Let's see. Banana Republic equals USA. I hope not, JB. I hope not. Probably just buy less stuff. I think it's going to go down to that. I mean, if it really is that kind of hardship, as you pointed out, Big Ab, then I think you'll start seeing more theft and crime. I mean, some of the stuff the videos I'm seeing in San Francisco are just astoundingly bad. So let's go through the economic data. So we went through our top 10. Interesting to see. Glad to see gold at the top of the list, but I would like to see some of these equity indexes pull back so I could potentially buy them lower. A lot of it driven by data. So I had Midjourney create me a cool little graphic here. I like this. It doesn't really say data, but data points. It's all over the place, and information is what's really driving these markets right now. So here's our look for the week. Honestly, most of it was pretty good. We started things off with durable goods orders, which went from negative 6.7 jumped to 9.9%. That's great. Far exceeded expectations, although the durable goods orders was slightly down. You look at the S&P Case-Shiller Composite 20 Home Price Index, meaning houses. Well, it went from 6.9 to 6.5, which is a decline. However, it was much better than expectations of 6.2. So all in all, I'd call that good. The big news for the week, there were two of them. It was GDP numbers. That increased from 2.8 to 3.0. Great. Unemployment claims was pretty much in line with expectations. You had wholesale inventories in line with expectations. The one that changed here a little bit to the downside was your pending home sales. So pending home sales were expected to go from 4.8% to 0.2%. Came out at negative 5.5. So I'm really surprised to see that, because we've talked about the 10-year and how impactful that is on the 30-year yield. My assumption, and we know what assuming can do, my assumption would be that for the month, we would have seen actually better home sales, more pending home sales, because these mortgage rates would be dropping and therefore making it more affordable for some people. So that was the real surprise number for the week, was your pending home sales that came out yesterday. And then today, of course, we had PCE Core Price Index, which was in line with expectations. That's great. Remember, 12 months of this at 0.2 means we're at 2.4% inflation. And at that point, I think the Fed has carte blanche to do whatever they want as long as unemployment isn't out of whack. Next, we had you had the personal income. People were making more money. That's great. But spending was also higher. So those two kind of go hand in hand. And that, I feel that's kind of a lagging indicator. If you see several months in a row where people are making more money, that's a sign that more money will most likely come into the economy. However, if spending outpaces the amount of money that people are earning, that's a bad sign, because that means they're funding their expenses with debt. Steve, there's a heart that's over. I have a weird little icon that blocks that message, so I'll get to that just so when I can see the last word. I think you're asking about Intel, which is actually on my list of things to talk about, which actually I'm going to talk about right now. So we talked about Intel yesterday, and the question came out, Merlin, what are your thoughts on Intel? Where'd you buy Intel? And I was bearish on it, right? My reason was they're outdated. They've got a weird model where pretty much they're their biggest customer, and they're not making chips that the people want. If you look at what happened today, and we drew this little box and said if it gets out of that box above 22, there's your buy point. Well, we closed at 22.04. I didn't think we'd get there in one day. The news is, and really it's kind of surprising, is the board is discussing splitting the company. So Intel is one giant company, but they make the chips and then they use the chips for their products. So what they are debating is spinning off the foundry, which is where they make the chips. So now you'll have Intel processors that are, their chips. And then you also have the manufacturing, the foundry that makes the chips. So it's essentially like having a Taiwan Semiconductor and an Nvidia in one building. Now that they're splitting it, so the foundry for Nvidia is really Taiwan Semiconductor. They're the ones making the actual chips. Nvidia takes those chips, recompiles them, reconfigures them, designs them, and makes the product that's your H100 GPUs. Intel's had those both under the same hood. And now splitting that, to me, is a great move, because now what you can do is, instead of being your own customer, and, in the drug world, they say never get high off your own supply, Intel has been really making their own chips and doing everything themselves. By splitting them apart, Intel can still benefit from the foundry and get all the chips that they want, but now the foundry can actually get outsourced by other businesses. So let's say that Big Eb wants to start a new semiconductor chip company, wants to compete with Nvidia. He's got a great idea for GPUs. He could go to Taiwan Semiconductor, or now he can go to the Intel foundry and have custom chips made for him that are for his application, and do that domestically. So I think it's a really good move. The question is, will it happen? This is something that was proposed a couple years back when the new CEO came in. And I remember watching this thinking, okay, that'd be an interesting idea if they could pull it off. But they didn't. And now it's kind of becoming much more of an issue. And I think if they did that, then you'd see some nice upside move in Intel, because you now have two separate companies, which means most likely what they would do is they would split the shares. So if you owned Intel, you would probably get spin-off shares of this other company, which adds a lot of value to you if you are a shareholder. So Intel may be a really interesting play here going forward. If that news is true, it will take them probably a while to vote on this, to debate it, to discuss the pros and cons of it. But personally, if I'm on the board of directors of Intel right now, barring some really strange detail that skews the whole thing, I am absolutely voting for splitting into two companies. I have the chip business, and then I have the manufacturing side of it, the foundry. There we go. There you go. So I wanted to share that one with you. Ulta, yeah. Yeah. Ulta, huh? Ulta got some. There was a lot of stuff that. First off, let's look at Dollar General, right? Dollar General actually bounced up a little bit. They were up a bit, and now they crashed back down. Brutal couple of days for Dollar General. Let's look at Ulta. So there's your Ulta. They had a pretty big jump down and then rallied for a lot of the day, but still down 4%. From a tech perspective, technical analysis perspective, they're kind of sitting in the middle of nowhere, aren't they? They're literally just sitting in the middle of nowhere, this unfilled gap that went all the way back to August 14th, and now we're kind of in the middle of it. So I don't have a dog in this fight. Part of me tells me it's going to come close the gap up here at 367 or close that gap down here at 329. You're in no man's land in the middle right now. So for me, nope, not going to do it. Companies often combine for synergies. You're suggesting opposites. Interesting. I'm not. Yes. And it's a good question, JB. Quite often in business, what you do is you're looking for a synergistic company or just a direct competitor that you can bring into your business and remove that competition. Therefore, you can now increase your prices, do what you want, plus economies of scale, right? Your business could be more efficient. If you look at something like what GE did, GE split into 3 different companies. You've got GE Aerospace, I think you've got GE Healthcare, and then there's a third one which I can't think off the top of my head. Why did they do that? Because the businesses just got convoluted. Is everything under one? It just got confusing. So now you spin those off into different companies. It was actually better. And as a shareholder, you would have made a ton of money. I like that you brought that up, JB. I will do my best next week to... I got a huge list of stuff I need to cover here for everybody. I'm going to say this was GE split. And I just want to go look at all the different companies side by side so you can kind of see what happened. While they had all these companies under one roof, they split them into more productive units by themselves, and it opened up to more business for each of those units. And I think that is what Intel will benefit from. You'll have a lot of companies that can now go to Intel and say, hey, make me this chip. Whereas before, Intel's like, hey, we're making our own stuff. You stay away. But now it could be a standalone business that generates a lot more money, and maybe that will fund some of its growth. I know that they were talking about building some new foundries and building some new facilities, but it was just so cost prohibitive that they scrapped that idea. Maybe if the current foundry split gets them a ton of business, then they can justify building new factories and therefore potentially starting to compete with Nvidia. Of course, the chip design would have to be completely different, but I think it would be the step in the right direction of salvaging this great company that was Intel. If they continue doing what they're doing, I think it's it's like the slow horse to the glue factory, as John O'Donnell used to say. It's not a pretty picture for Intel. They have to adapt. They have to change. This is a legacy company that's had it their way for 50 years. Well, let's say 48 years. And now it's slowly changing. So hopefully, if you're an Intel holder and you're an Intel fan, hopefully they change those numbers and split their company into two and just start to change their business model. Intel split has been discussed. Yep, exactly, Raman. And 2 years ago, when that new CEO came in, that's when I really remember the discussion. Intel Foundry is formed with the Intel to make chips for other companies. The issue is they have not been getting many customers. Right, but they haven't officially split. It was an idea, but they didn't do it. And who knows? Maybe if it's definitive, maybe they'll get more customers. And to Raman's point, 56 years. All right, correcting all my little details. 56 years. To Raman's point, they have discussed this in the past, and they haven't gotten a lot of customers. And I make the argument that what happens, at least in my belief, is people don't want Intel's chips. There's just better chips out there. And, obviously Nvidia everyone wants Nvidia right now because of their AI capabilities. Intel is so much focused on a CPU. They should probably start to make a division of GPU within Intel and compete on that model. Or if they have one, really ramp up their focus there, because a CPU, if we do it in like the automotive industry analysis, the CPU almost feels like a steam engine locomotive. It doesn't make much sense anymore. They look cool, and the white puffs of smoke coming out are great. But a steam engine, other than novelty, is not a very powerful, productive engine. Then you went to coal-burning engines, which, of course, now I can get much faster, I get more heat going. That might be the GPU, and maybe down the road there'll be some electric, I think we do have electric trains today, but that evolution of it's just not a necessary technology anymore. I think a lot of people are going, why would I build a steam engine? I would go with the coal-burning one, or wood-burning, or something more futuristic. So I think that's the dilemma that Intel's facing, and hopefully they will fix it. I have no dog in that fight. I'm not an Intel shareholder. Looking at that chart, I actually might be. This would have to be a long-term play. I mean, I don't expect this to be all of a sudden the revival for Intel based off a news release that was made today about that one, but we'll see. I think the first chip was an Intel 4004, a 4-bit CPU. I remember my old CEO at the company I worked for in Italy, and we were a trading firm. He had an Intel chip on his wall. It was this big. It was 8 kilobytes. It was some giant thing. It's just crazy seeing how much technology has been innovated. Intel is the largest manufacturing in the United States, 700 acres. Ocotillo campus. Sweet. They need more. The demand for chips is off the charts. They need more. Build more facilities. Get more money in there. Okay, what else I want to discuss here today? I guess I'll bring up SLV just because I'm just making clear on my trade. So just so you guys can know the trades I'm in, I did the 2550s, which is kind of right below that origin of this move here. So I did the 2550s, and those will be the July 20th. Or sorry, not July 20th. The September 20th. So we'll mark that out here for you guys so you can see that one in play. And that's that one in the Rivian. I have some other silver I did about 2 weeks ago or a week ago. And that's the other one I have open right now. So I'll map out when I make more here. When I make more trades next week, hopefully I'll just map them out like this so you guys can kind of see. I know some of you said you like that. Some of you said you don't. But I will keep those lines on there and document them for you. Chips and dip, baby. Well, it's going to be a chip and dip kind of weekend. Football. Love it. My 49ers finally ended our soap opera with Brandon Ayuk. A little disappointed about that. Just sign a contract, kid. Just move on, sign a contract. But he held out. He held out and didn't get any more money than he was expecting. So there we go. What other questions you guys have for me? That to me was just kind of the highlights of the week. I think I feel pretty optimistic, honestly, going into next week. I think we've had some pretty good data. I think that core PCE price index was great. I think our GDP number was great. I love the fact that Nvidia had blowout earnings across the board on everything, yet the market was disappointed and Nvidia sold off. It would not surprise me to see stabilization in Nvidia and see it start to rally again. Here's your Nvidia chart. As you guys can see it, the big sell-off there. I'll get rid of these lines, which were the option strike prices that were in play. And I'll get rid of that one. You've got right now, it's a bullish Harami pattern technically, and maybe wait on that one to see if it jumps to the upside. But all the data, all the news, all the numbers look fantastic. It might still be overvalued just because people have pumped it up so much, but those numbers are great. I mean, over 100% year over year net income growth is pretty phenomenal. Pretty amazing numbers there for Nvidia. So I think that'll be the one I'll be watching next week. And I normally don't swing trade Nvidia, but I may actually dabble in that one next week if it can break above the high that we achieved today for today's market. Markets were strong today. Would expect more upside next week. Yeah, I would agree with that. The only challenge with that one, Steve, is it's the weekend. Anything can happen over the weekend. Back in my heyday when I was a high-speed day trader, I'm not going nostalgic right now, but when I was a high-speed day trader back in the 90s, there were a large number of times where I would feel very confident. I'd make a statement just like Steve did. Man, market's finished strong today. It looks great. I'm feeling good. I'm gonna take this position home over the weekend. And let's say I got like a $3,000 winning trade on. I felt really comfortable with it. And I leave on Friday. I go out, have a great weekend because in my mind, I'm already up $3,000. I'll be up $10,000 by next Tuesday. And then Monday morning, markets open up and all of a sudden that thing just cratered because of some event that happened internationally or some bad news that happened with the company or some announcement. And next thing you know, instead of $3,000 winner, I'm like a $5,000 loser. So I really don't like taking things home over the weekend. I mean, I love options over the weekend, but I typically don't like taking stuff home over the weekend. But I do agree with you. It does feel strong. That market looks good. The way we finished looks rather positive. I mean, obviously, we're at the highs of the week, and next stop is going to be those all-time highs. So, yeah, I'm in your camp right now. I do feel like it's going to kind of keep moving to the upside. We shall see. Only time will tell if it can actually make it up there. Let's see. I'd be upset if I were Nvidia top brass. What's a company got to do to be... Yeah. Well, JB, you can't be upset if you're top brass at Nvidia, right? Because your share prices have gone up exponentially, like more than most companies will ever experience in their existence. That's how much their shares have gone up. So if you're top brass right now, you're loving it, right? Absolutely loving it, man. Hindsight is 2020, and had I known, I would have filled out a job application at Nvidia to be a janitor. I mean, the janitor's probably making way more than I am working 40-hour weeks. Just not my trading, but just the actual full-time job. And with their share options. It's just crazy. Let's see what else we got. Liz says, possible topic for early half of September. Market doesn't do well in the few months after the first rate cut. But this time we're normalizing rates and not cutting in response to recession. Thoughts? I would want, before I make statements on that one, Liz, I'd want to look at I want to see all the charts and line them up with all the cuts that have happened to not only verify it, but to get a deeper understanding of that. But that would be a good show topic. I've got a couple others. So, for example, KF wants me to do a show. I mentioned I would do this one a while back called The House Always Wins. And it's really just dealing with probability and kind of why the financial markets are a rigged game. And a lot of it is going to relate to casinos and how casinos function and why they make so much money. I think trading is no different. So that's on my list to do as well. I got quite a few things I need to do for you. Let's see. I see YM is an all-time high, but no other indexes. Is this a divergence to be afraid of? Not a divergence to be afraid of, but what does it represent? To me, it represents, if you look at the Dow, so here's your diamonds. And yeah, all-time high. Looks fantastic for the Dow. I'll put up the index for you, or the ETF for you. It's a little bit better. Let's go to the YM, right? So there is your Dow, all-time highs. And what does this represent? Well, it represents the blue chips, which are supposed to be the most valuable, biggest, prestigious companies. What's lacking in this index is, I'll show you here real quick. It's not all tech. So the indexes that have been kicking butt, the NASDAQ, for example, is pretty much all tech. There's financials in there too, but it's technology, whether it's drugs or pharmaceuticals or just actual tech, semiconductors. It's the most heavily weighted, and that's what's dragging this market up. But now we're seeing a little bit of weakness in that NASDAQ as some of these companies have a little bit of struggle. So what's in the Dow? Well, it's a much more spread out. Let me just get that out of there. We'll go constituents, and you guys can see there's only 30 in there. But notice the first thing is not a tech company. United Health Group. I'll make it bigger so you guys can see. Right? First one there is United Health Group. Dang, I want the percentages on here. There we go. So 9.4% of it is United Health Group. Number 2, not a tech company. It's Goldman Sachs. So you got Goldman Sachs sitting out there, financial firm. We have to wait to number 3 to get to Microsoft. And after that, it's a long way before we get anything else in tech. You've got Home Depot. Great. Caterpillar. Fantastic. Amgen, McDonald's, Visa, Salesforce, American Express. More heavily weighted here with financials. And then all of a sudden, Apple comes in at number 8, number 9 on that list. So this is a much more diversified batch, and I think that these are staples of consumerism and the United States, right? Goldman Sachs, underwriting and bringing companies public. United Health Group, obviously healthcare. Microsoft, okay, well, we know that tech angle. Home Depot, times of recession, I'm building more. I'm doing more home improvement projects, which I love to do. If I had an addiction, my addiction would either be Shabu Shabu or Home Depot. I love Home Depot. There was a point they actually knew me on a first name basis. I've been going to the Betty Ford Home Depot rehab clinic, and I'm making good progress. I've only been in there twice this month. It's been real good for me, but I'm removing some trees, so I'm going to be in there planting a whole bunch of trees from Home Depot. Anyway, Caterpillar doing great. Let's look at the charter cat. Right, and this should also be a good sign because Caterpillar is heavy equipment, big machinery. Yes, they sell boots and stuff and clothing as well, but the big money is the big ticket items that they sell. That's a sign of global expansion, right? When you're buying a tractor and a backhoe and a forklift, these are all signs that the economy is doing well because we need that infrastructure there. So I think that's why. I think it's a rotation out of tech. I think I'm not saying it's flooding out, right? It's not like it's flying out of tech, but But I think the big money, the hedge funds, the institutions who have been riding this wave of tech are going, enough's enough. We don't need to be all in on tech as we were. Let's take some of that out and go a little bit diversified here. Let's go to the Dow because it isn't as heavily tech-centric. And I think that's why we're seeing that one. So good question, Mike. I don't know if it's necessarily a divergence, and it's certainly nothing to be afraid of. It just means that money is rotating from a high-risk, risk-on asset. Well, they're all risk-on, but the highest risk-on asset, which is tech, and has been doing great, to now maybe more stable stuff, more less volatile companies. 80% gross margins on Nvidia ain't too shabby. Phenomenal. You know, and Big Eb, that's been my question to myself is how long does that last? If you have a monopoly on that type of chip and everyone wants it, those 80% margins will last a while. But if we see competitors come in, it could eat away at that. But I don't see that happening for a while. So I think Nvidia still has a good amount of upside move. What else do I got? Dow is the king again. Yeah. It's funny you say the king. Like for me as a trader, like I don't trade the Dow. I've traded in the past, but I don't trade the Dow. I don't know why. I have this this build up against it. If I'm trading, particularly if I'm trading futures, I want the volatility. So get me in the S&P, get me in the NASDAQ, get me in the Russell. Those are fine. Throw me some crude oil every now and again, some gold futures. That'll do me fine. Let's see. GE spun off Vernova, yep, GEV, and I was given 437 shares with no effect on my GE stock. It's great, right? It's awesome. Spinoffs, if you're there for a spinoff, they can be fantastic. And I do think Intel will probably spin off. It'll be a money grab. So when they do this spinoff, what happens is Intel, they hold a bunch of shares, right? They have shares on hand that they can use for assets and acquisitions. They'll have that, and all of a sudden they're going to have a huge block in that spin-off company. Typically what happens is there's this euphoria around a split like that. So what will happen is Intel is going to have a ton more money, which right away they could sell those or make some agreements to use that as capital to purchase other facilities, to expand, to get bigger. So it could really be a win-win for Intel, but it's going to, like I say, it'll take a couple months till that is finalized, but it would not surprise me within 6 months that you hear an announcement that Intel is in fact going to split off its foundry business, probably called Intel Foundry. They'll do the ticker symbol be INTF, and you'll have two separate companies, and hopefully they'll rip. But yeah, Vernova was one of them that GE spun off. House always been perfect examples. Colorado game last night. They were a 10-point favorite, and North Dakota State covered, and Colorado were. Hey man, betting on sports, that's a rigged game. If you want, there's a good series, I think it's on Netflix, called Bad Sports. Great. If you're a sports fan, as I am, I love sports. It is great. It's about just bad things happening in sports. And one of them is Arizona State and the point shaving scandal, where they need to win by 2 to cover the spread, and boom, all of a sudden they win by 2. And if they were up by 3, they'd be missing shots so the other team could catch up. It was just crazy the way they were price fixing games. Drives me nuts. Let's see. Dow is price weighted too, unlike other indexes. Yeah, that makes it a bit wonky, right? Because United Healthcare is obviously a very expensive stock. So when a company splits, their weighting in that index diminishes significantly. So when Intel does a 10-for-1 split, it went from number 1 down to number 10 or 12 on the list. Home Depot made a large acquisition recently, $18.5 billion to get involved with professional contractors. Didn't know that. Good, they should. Like I said, I use so much. Robert, is this how a soft landing looks like? Apparently, Robert. Apparently, this is what a soft landing looks like. I don't think we've landed. But if you look at the planes coming in and the runways there, you're feeling really confident. I don't think the tire has hit the ground yet. Right? And so I don't think we're completely clear from this. As anyone who studies business and investing and economics, to have a series of events that has happened, like COVID, and to pump that much money into an economy and not have any long-lasting effects of it, I don't believe it. I just don't believe that we can pump $17 trillion into an economy and manipulate our economy so much, and all of a sudden nothing comes out of that. You're totally fine. I'm very skeptical that this is a soft landing. But Bill Addis says no way. He says we're going hard landing. We'll see. We'll have to wait and see. XLU, XLB had good months. Yeah, Margaret, I think that might be, I'll save that for next month. I like to do the top 8, but I'm thinking I might want to just show the sectors because that is really indicative of where the money's flowing in the market segments, but it just takes me some time to put that stuff together, so I just didn't get it. With a 400% move in GE, was it a mistake to take GE out of the Dow? Well, you can always second guess yourself, right? You can always second guess yourself, and maybe it was a bad idea to take GE out of the Dow. I don't know. They were struggling. They looked terrible. I mean, God, look at GE Aerospace. Gosh, look at that bad boy. I mean, talk about a great chart. Who would have thought this was GE? But it is. And what was Vernova VRN? I think that was the ticker symbol. No, it was GEV. GE Vernova. I mean, look at this. Since their spinoff, this thing's up almost 100%. So, GE, if you're an exec at GE, spinning off your companies to competent divisions that are standalone is the way to go, right? You merger, you acquire companies. So maybe they bought, an aerospace company in the past and brought it under the umbrella of GE. Great. But now you have all this mixing and matching of departments and it could get confusing. Now you spin off those departments, you keep each one as a separate stock, and all of a sudden the bottom line numbers are so much higher. If you're an executive, man, if you're someone who works at Intel right now, you better be fingers crossed that they do this because that'll be a huge pop in their share price. At one time, GE was on their way out of business. Absolutely. And I don't know all the details as to why, but to me, it's a lot of inefficiencies, a lot of waste. By splitting them, you now have department heads who can focus because, when you get a company that's that big and so many people and so many departments all under one umbrella, that's tough to manage. I think if you can spin it off like Vernova or GE Aerospace, right now it's a very focused company. We're doing engines for aerospace and other aerospace projects. We know exactly what we got. And Tim down in marketing, what are you doing, Tim? You're not on this team. You're out. You trim that fat along the way. And I think part of that split as well is it gives you an excuse to figure out which employees to keep, which ones to get rid of. A lot of companies, I believe, have way too many employees they don't need. They're way underutilized, and they could just shed those ones very quickly and move on. All right, I'm gonna wrap up. We're bring back Jack. I'd love to see him come back and take over. Which side of Intel gets the pop? Both, because the bigger, they'll both pop, but the bigger pop would be the foundry, I believe, because the foundry would now be the one, if they can get the customers, that'll get a lot more business. Intel itself, back to my original argument that they're focusing on the GPU or CPUs. That's an old way of running a computer. Now it's these ARMs, it's GPUs, it's custom tailored chips. So either they revolutionize and change the Intel business, or that one's going to fail. Then they'll always have the foundry, which they can split off and keep that one running as just making chips for anybody who wants them and who wants to be a customer. So, GE also had a 10-for-1 stock split. Yeah, I remember. I actually got a part of that one years ago. I sold mine. I don't remember when that stock split was, but I was a part of I was a spin-off of GE. I held a bunch of GE shares, and of course, I sold them before this run-up because that's the nature of the beast. I'll always sell before a huge rally. Do I have an Intel target price? No. If you look at this, how can you? Let's go out to its weekly. Your logical stops are going to be where you see turns in the past, but I feel like it's a completely different company. The company GE today is not what it was back in 2007. Very different. They've spun off different departments. So, your target's 200. We're at 174 right now. I'd say 200 is your target on that bad boy. Okay, that's it. I got to wrap up. I got to go. It's weekend time. I have a cocktail that's going to be calling my name downstairs. So cheers, everyone. I hope you enjoyed. Monday, we've got no show. Tuesday, I'm going to have David Warner on the program. And Wednesday or Thursday is still up in the air, although there's a 10% chance I will not be doing a show one of those days because Disneyland's least attended day of the year is Wednesday and Thursday. They say Friday as well, but we'll see, Kenny. I'm not sure if I'm going to go, but I will probably see you guys on Tuesday with David Warner talking Forex. Hope you guys have a fantastic weekend. Do something fun. It's Labor Day. You got Monday off. Hopefully you have Monday off. Make it a great 3-day weekend, and I will see you guys on Tuesday. Take care, everyone.